President Donald Trump has accused the chairman of the Federal Reserve of letting Americans down after interest rates were slashed for the first time since the global financial crisis. That's despite President Trump asking for a rate cut for months.
Joining us now is Kristian Kolding from Deloitte Access Economics. Kristian, good morning to you. So has enough time passed where we can see some real results from that reduction in rates from the Federal Reserve?
I think it has. I think it was quite interesting that Donald Trump came out and was quite scathing of the reduction in the interest rate. What really happened was that the US Fed ended up in an uncomfortable compromise position wherein they reduced rates, but not by enough, or not as much as the markets and President Trump were wondering. On the other hand, there's a lot of people who thought the rates probably didn't need to move, but what really happened and what the signal is from all this noise is that the US Fed, they are worried about upcoming slowdown in the American economy. However, they're also realising that the American economy can run at a faster pace without the risk of runaway inflation occurring. So that's why they decided to cut rates by 25 basis points last week.
And how influential will that be on the decision of the RBA tomorrow?
It will have some impact, but it won't drive the decision by any means. The impact that it will have is that as the US, they reduce their rates, the expected depreciation of the Australian dollar is unlikely to be as strong as what it would otherwise be if the Australian RBA reduces rates. So it takes out some of the potency of a rate cut, but by no means does it nullify it, and by no means does the RBA set rates purely based on American rates.
Kristian, the trade war is intensifying, and so a report in the Australian Financial Review this morning points to the trade war helping miners but not necessarily consumers. Can you talk about that?
Absolutely. It's an interesting one, isn't it? Because the first impression you have is the trade war is obviously going to be bad. And the way we see it is trade war is actually more of an unnecessary risk on the global outlook. And the reason is that at the moment, China is still holding up, and its response to the trade war is actually to stimulate the domestic economy in China. In doing so, it's increasing its infrastructure spending, which is creating demand for Australian coal and iron to build steel. That all flows down into the Australian economy by supporting miners through higher commodity prices, which we saw last week bounce again from the RBA index. On the other hand, Australia is under pressure from a consumer which hasn't enjoyed any material wage rises on a real basis for quite a few years, and are suffering under a relatively high debt burden, which is only seeming harder and harder to overcome as house prices they start to fall. Last week alone, we saw retail sales come out from the ABS, and there was no material rise in the volume of sales over the past quarter.
So would you classify that, Kristian, as a retail recession, or is that too alarmist?
I would say that's too alarmist, by all means. But it is a clear sign that the consumer is under pressure. Now, when there's no material rise in the volume of sales, that's actually quite interesting when you consider the fact that there is probably a 80,000 people increase in the size of the economy.
Kristian, new ABS data is to be released next week. What do you expect that to reveal?
There's a very interesting data source coming out this week. It's called the Cost of Living Index, and it measures the cost of living across a number of different household types. And it's really used to understand the cost of living that is faced by pensioners, households that are headed up by employees, so your normal working households, as well as self-funded retirees and other non-government transfer recipients. So it really gives an understanding of the pressure that different types of households are under. And I think particularly with the discussions around New Start lately, as well as the DME rates for pensioners, there'll be added attention put towards this data set as it gets released.
All right. Kristian Kolding from Deloitte Access Economics, thank you very much for your time this morning.
Thank you, Peter.